When I first started working in the bank, the first few months were training, obviously, and the credit class, I remember the first thing the teacher said was, look, in banking, everything is white and black, except credit. It's gray. And after working there in 2 years, I realized that's absolutely true, right? And so much so with credit score. It's such a gray area. Such depends, right? Now this video is for newcomers, but I also noticed that a lot of Canadians don't know what can affect the credit score and how to build the credit score. So this video is going to be for everyone in Canada, right? Let's start by explaining what a credit score is. So a credit score is a number between 300 to 900. The higher the number is, or before I get into that, the number represents how responsible you are at paying credit or using credit, right? So the higher the number, the better and the more responsible you are with credit and paying bills on time. And the lower the number, you have some missed payments in your history of credit, right? And 0 indicates you have no credit history. So ironically, 0 is better than 300 because 0 just means you don't have credit history, whereas 300 shows that you have credit history, but you just suck or you're incapable of paying credit on time or paying back at all in that case, right? And another thing you guys should know is credit score. Banks don't deal with credit. Like they're not the ones that do the credit score. It's two companies here, TransUnion and Equifax, and all lending companies report to them every month. They're the ones who do the credit score. I say that because sometimes I get clients come up to me and go like, oh, my credit score in your bank is bad. It's like, no, wait, hold on. Your credit score is in general. It's not like in one bank it's bad, and if you go to another bank, your credit score is a separate credit score. Your credit score is general, right? And it's two companies that I said. All right, so why is it important in this country, credit score? 3 reasons. First, when you want to take out any kind of credit, right? If you're applying for a credit card, if you're applying for a loan for a car, if you're applying for a mortgage, whatever kind of loan you're applying for, they're going to check your credit score. And based on your credit score, you can either get denied if it's too low. They'll reject you. They won't give you credit. Or they'll give you credit, but with horrible interest rate. Or if your credit score is good, they'll give you credit with good interest rate, if there is such a thing as a good interest rate. Another reason why it's important is when you go rent a place in Canada, they'll check your credit score. Because tell me, what kind of landlord is going to accept a tenant that has a 500 or a 400 credit score? It shows that he doesn't pay on time. He doesn't pay. So that can affect your ability to get a home, rent a home in Canada. And a third way, which is not so common, but in my personal experience, it happened. Employers will ask for your credit score. So you can get rejected from specific jobs for having a bad credit score. All right? All right, so how do you build a good credit score? And how do you destroy it if you're looking to destroy it? Or how to destroy it so you can avoid destroying it. Let's put it that way. The number one way, the fastest way, and the easiest way to build your credit score is paying your credit bills on time. Don't miss a payment. Don't be late. Pay your credit cards on time. Credit cards, and for some weird reason, telephone bill providers, they're in the credit score thing. Now, when I first found that out, in my head I was like, okay, so logically that means all bills, even utility, gas, whatever it is, anything that's under your name and your SIN number, if you miss a payment, logically then your credit score gets affected. No, it's just credits types of loans, all types of loans, and the telephone provider. The others, utility bills, whatever, it's not included. However, if you miss enough payments from the utility bills and it goes to collections, that's when your credit score gets affected, right? And you don't want anything to go to collections. If credit score is important to you, and it is important in this country, you don't want anything to go to collections. If any kind of bill goes to collections, if you miss paying bills month after month and it goes to collections, that's it. It's called having a derogatory in your credit history. It's going to stay for 7 years. Good luck. So that's number one, the fastest, and really the fastest way to build it, or the fastest way to make it crash: paying bills on time. Second, they say, all right, and underline the word they say using 30% up to 50% of your credit utilization. So that means if your total amount of credit, if you have multiple credit cards, let's say each one is 1,000 and you have 3 credit cards, so your credit utilization is 3,000 total, you should only use 30 to 50%. Now I say they because me personally, honestly, I've been using between 60 to 80%, sometimes up to 85% of my credit utilization, and that hasn't really negatively affected my credit score. So I think what they're trying to say is don't max out. Don't use 100% of your credit score every month in, every month you're using 100% of your credit utilization, right? And don't go over 100%, because sometimes I see people with credit cards with $1,000 limit and the statement balance is $1,000 and 100, like they went over the credit limit. So obviously you don't want to do that. And then another thing is, whenever you ask for credit, whether it's from the banks, or if you're taking out a car, or telephone providers, like I said, there's going to be a credit inquiry, a credit check, a hard check we call it. So a hard check means we're going to check your credit history, and that check is going to reduce your credit score. Now I get people asking me, how much does it reduce it by? This is another gray area. I really don't know. It depends. If your credit score is good, it'll be in the single digits, maybe 7 points, 8 points, 9 points, something like that, maybe 10 points. If your credit score is bad, it'll go up to like 17 points, 18 points, 20 points maybe. There's no straight answer. It's that gray area I was talking about. But what that means is you don't want to go like in one day and do 5 credit applications, right? You don't want to do 10 credit applications in 1 month. Even if you go with the low end, let's say 9 points, 9 into 10, that's 90 points. That's 100 points in 1 month. Your credit will go down just from the inquiries. And then when we check and we see that you went 10 different places to ask for credit, that becomes suspicious and we'll reject you. So you want to space out your credit applications if you need the credit, right? You don't want to do it all in 1 month or in a couple of days. So those are the ways that your credit score gets affected. When I first came back to Canada, I was 32 years old and I didn't have any credit history. So my credit was 0, and banks refused to give me credit because that's kind of suspicious. A Canadian who's 32 years old and has no credit history, they were avoiding giving me credit. My first credit was I got it in July 2024, and it was from one of those second chance credit companies. They're not even banks. I'm not going to mention any names until they sponsor me. And from July 2024, with having 0 credit score history, until today, which is June 2026, my credit score is 789, 775. It fluctuates, but it's considered very good, right? And it's all about paying bills. All I was doing is paying bills on time. I never missed any credit payment, and my credit, I just kept seeing going up until it's quote unquote very good, right? And those 2 years or 3 years, I've had 8 inquiries total, different kind of, whether it's from telephone provider, banks, loans, whatever it is. I had 8 of them, and like I said, I used between 60 to 80%, and my credit score has been going up, and it's been fine. So my personal experience is just pay your credit on time. That's what's going to affect your credit score the most. That's it for today. That's as much as I can explain with credit score. I hope that was useful. Send it to newcomers. Send it to people who need to understand what a credit score is. Leave a thumbs up if you like the content. Leave a comment on what you want to know about Canadian banking system. I would love to hear your opinion, and I would love to make a video if anyone needs anything specific. And thank you for listening. Stay debt free.